Hey folks, and welcome to this video. Today we're going to run through a couple of things. Firstly, we're going to take a quick look at an update I have made to the dashboard, which I think is pretty awesome. And then we are going to look at some probabilities. Okay, so first of all, we all know the dashboard, or at least people who use it know it. We have all of the signals from the supply and demand. Algo, they are submitting these alerts on 3 different time frames, on the weekly, day, and the 4-hour, and these are ticking in quite often. You can see that 45. This is about half an hour ago. All of these ones ticked in, and so the scan is run like several times a day. And if there are valid signals or alerts, I would rather call them, the back end submits them to the Pipnotic website via an API, and I take all of that data and I format it nicely in this table. And so now you can take this information to a price chart and take a closer look and see if it's something that you want to engage in. But it's pretty cool. It's a really nice way to kind of slow things down a little bit so people aren't jumping into trades because of emotion. And yeah, it's just a really nice way to view these different alerts, supply and demand zones across multiple time frames and asset classes. Then we have the buy and sell zones dashboard, and the buy and sell zones dashboard simply gives us or shows us the pulse of the buy and sell zones expert advisor. And it's running on about 50 different computers in probably 50 different configurations. I don't know, but similar configurations perhaps. But it's running on demo accounts, on live accounts, on competition accounts or contest accounts they're known as. And it's scanning all sorts of different things. And so here you can see the account type, the asset, the lots, and the information about the trade, the time frame, the operation, and the kind of order. Because the new update has married market execution and limit orders. And so it's a configuration that you can simply enable. And it's a really good configuration to use at session open. So when the Asian session is opening, or the European or the North American, you can enable it on whatever time frame, and you can let it run on assets that are going to be affected by the liquidity of that session. So for example, I like to use it on the Japanese index at the open of the Asian session, because this is where I live. And I know a lot of people are doing the same thing, and they're doing it at the open of the US session on the S&P 500 or the NASDAQ or the Dow Jones at the open of the session. And this can be done very easily. And this is, as an example, these ones here, they're examples of exactly that. But the update I made to the dashboard yesterday enables us to see how these signals or how these alerts have been performing over time. And I'm doing this by looking at the way equity on the accounts that the robot is running is expanding or contracting. And so we started off the beginning of the year at, let's say, $5.1 million. And today, which is about 4.5 months later, we're up about $200,000. So that's about close to 10%, which is pretty cool. Very, very cool. And it just gives us a really good indication of how the algo is performing over time. And I like this a lot. I really like this. And this is something I've wanted to do for a long time. I've had the data, but I wanted to let the data grow so that I could display it graphically like this. We do the same thing in ASR, but in ASR I don't have a lot of data. I only started recording data a few days ago. And so we went from the 17th of this month, from here up to here. So there's slight growth, which is good, but it's too early. We need to see 3 months of data, which we have. We have, almost 5 months. We're 10 days away from 5 months on the buy and sell zone, but we need more data here. But what I can tell you is that I have asset strength reversion running in default configuration on a VPS, and it's doing very, very well. Very, very well indeed. It's just kind of tricking along. It's been running for 3 months, and I think there was a period of time where I was testing an algo, and the algo gave back about 10%. It lost 10% of the equity on the account, and so I took the new asset strength reversion, and it earned back that 10% in 1 month, which is really, really exciting. So I'm quite happy to see that it's doing it. And it's completely automated. There's autopilot. I'm not interfering at all. I'm just letting the algo run and do its thing. And it's really working very well. Let me show you something that I want to iterate once more. And that is the whole concept of needing to be right all the time. And the answer, rather the discussion that I want to start on now, and it will only take a couple of minutes, is that you don't have to be right all of the time. In fact, if you're right 36% of the time, which isn't a lot, and you have an average winner to loser that is 3 times bigger than the loser, let's say you have a sample size of 1,000 trades. Let's maybe do slightly less. Let's do 100 trades to start off with. We'll run it on a random entry just to see. You can see we're having growth. We're experiencing growth. We have 45% returns on 100 trades, winning 36% of the time, and ensuring a minimum R ratio of 3. And if we look at the details here, we have average winner to loser is 2.96. But again, note that we had to suffer 9 losses in a row. That's a lot. And most people would give up on their trading strategy after 9 trades in a row. But if you continue to let it run, you don't care, you don't pay attention too much to the losers, you just keep applying your edge. Over time, if we expand this, let's do 1,000 trades. Let's say you're doing this on a smaller time frame. Let's just look what the results look like. They look like this. I mean, this is crazy. We have 11,500% returns in 1,000 trades. I don't know how long that's going to take, depending on the time frame, but you can just see that, I mean, it looks silly. And if we apply it to a real algorithm like buy and sell zones and we run the same thing, you can see here that we are getting, we only have 27 signals. Let's try again. See if we can get a few more signals. That's a very tiny sample size. Okay, here we are. So we have 386 signals. And so here you can see, because what it's doing here, it's looking at price data for loads of different assets, and it's picking the random one and looking for signals within that. Okay, and so here you can see we have 386 trades. So the water pump is buzzing in the background, and we have 134% returns. An average winner to loser, 2.96. And even here with the buy and sell zones, we had to suffer 9 losses in a row, which again would make someone almost give up on their strategy. But you can't do that. You have to leave it alone. If we have, let's put maybe 5,000 trades, and that could be maybe the career, maybe a 10-year period, depending on what we have, the time frames we're using. Here we had 64%. This is only 200 signals again. But what I'm trying to say here is you have to keep pushing the button, or you have to let the algo just run. Don't fiddle, just let it run. Let it take the winners when they're there that are 3 times the losers, and just keep on doing that over and over again. And over time, I mean, you're going to see something that looks similar to this. If we do this on random entries, it gets really crazy. You can see here. And again, we're winning 2.8. We're taking in 2.8 times the losses per winner. 17 losers in a row. That's crazy. But look at the returns. I mean, that's a very, very big number. Okay, so we turned $1,000 into that after 5,000 trades. Anyway, food for thought, but I'm going to leave it at that. If you have any questions, please do let me know, and thanks for watching.